Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me to a new week. Well, after 5 consecutive challenges towards the top side of 69 cents, the Australian dollar staged a significant downturn on Friday and posted an intraday low of 68.70. It's now vulnerable to the start of this week of 68.45 challenge, and if that level is pulled, then the bearish sentiment will continue on down to an objective of 67.70, with any advances towards 69.05 to 69.55 as of still a supply zone. As you can see here, the market does not want to be close to that level. Later this week, we have the employment change, and at present is looking down towards a forecast of 11,200 after the previous job number came out from November of 39,900. The euro also took a significant downturn as the US dollar rallied further on Friday and now closing in on its objective of 97.60-70. On the flip side, the support level at present is holding at 110.80 after posting a low of 85 on Friday. If we see a break of this level, this exposes further bearish sentiment towards the target, which I'm still calling at 109.55 to 85. With any advances, expect to see resistance at 110.55 and then 111.80 to 112.10. As you can see, the dollar yen has made no significant moves since the signing of last week's China and US Phase 1 agreement. It is expressed that the further weakness should come into play because the longer we remain above 110 and not taking out the level of 110.60, then the bearishness would increase, with two targets to the downside seen at 109.95 as minor and 109.60. Now a break beneath there would give further scope towards the bottom side of this range around 108. The pound is breaking down and as you can see posted an outside range day and does pose further risk towards the level of 129.1030. Now a break beneath there would give further exposure down towards the region somewhere of 122 to 124. So a big call if we take out 129.10. Towards the upside, resistance seen firm at 131.15.45 for the week, with immediate resistance seen at 130.60. As you can see, I've widened the picture out a little bit since the rejection of the 7-year highs around 1,611. The gold has took the challenge to the downside of 38, posting a low of 35, rejected, and it's presently still remains vulnerable to the downside due to the MACD. I do anticipate, though, that if we see a break above 1,565, which isn't that far away, just about 8 pips in terms of the market where it's trading at 1,557, so a break above 1,565 would reinstate the upside to 1,600. However, the longer we remain underneath 65 could give further threat to the downside, and if we take out 38, would expose the region of 1,522 to 26. Since rebounding of $57 a barrel, the market continues to the top side and now increasing from a technical point to an objective I'm holding somewhere around $60 to $61 a barrel. Any pullback should find support around 58.45 and a base still holding around 57 to 57.5. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to this day and to the new week.